Hey everyone, Vertiv is a company that helps businesses building out data centers for artificial intelligence with temperature control, things like liquid cooling solutions. So, given its position in the development of the artificial intelligence industry, Vertiv is gaining a lot of interest from stock market investors. So, in this video, I'm going to dive a little deeply, understand what's going on with Vertiv in its latest quarterly earnings conference call. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Vertiv Executive Chairman David Cote saying that demand is clearly accelerating and we're well positioned to capture the growth and to deliver great returns for our investors. And we're already seeing evidence of that from Vertiv, and I'll share with you the signs that are demonstrating growth in the company's business. The chairman continues to say, we're well positioned to further differentiate and gain competitive advantage with the technology shifts underway in the data center industry. I'm excited about the year ahead. It started off strong, and I'm more excited about 2025 and beyond. Understandably so, the company's latest quarterly financial results beat expectations on the top and bottom line. Order growth was strong, and the company increased their outlook for the rest of the year. So everything moving in the right direction, seemingly, for Vertiv Holdings. And the CEO reiterated those sentiments from the chairman, saying that the first quarter revenue was up 8% year over year, but more importantly, orders were up 60% year over year. And if you watch my recent videos on Oracle, this growth versus orders difference is similar to what's happening at Oracle. Oracle's revenue is growing in a similar range, with its order growth expanding at this much faster pace, and that signals better revenue growth ahead, accelerating revenue growth ahead, given that most of the orders are coming from beyond 2024. What management is saying, most of the acceleration in orders in Q1 is for deliveries beyond 2024. So these are longer term orders, longer term contracts, and most of that acceleration comes from large orders, which typically have longer customer requested lead times. And that's helpful for Vertiv. If a customer is ordering for 2025 and beyond, that gives Vertiv time to meet that demand. And if you have time to meet that demand, if you know ahead of time what sales are going to be like, it allows you to plan better. It allows you to adjust your resources so that you can deliver on that order more effectively. You don't have to rush. You don't have to be caught off guard and then having to rush to meet that demand. You already know what's at stake and what you need to produce, and so you can plan accordingly, and that gives the company better time, and that often leads to better profitability because you adjust your resources most effectively. And so you're seeing that with Vertiv as well. Its operating profit margin and its operating income is expanding. The operating margin increased to 15.2%, and that was a 73 million increase in operating income and a 370 basis point improvement from the same quarter last year. 370 basis points means 3.7% improvement year over year in the operating profit margin. Also, free cash flow of 101 million was an improvement of 76 million from the same quarter the prior year. So improving in all the key areas for Vertiv, and then benefiting from that tailwind in the expansion and building out of these next generation AI data centers, which in Vertiv's benefit, the latest technologies require liquid cooling. And so that's right in Vertiv's wheelhouse to benefit from that shift in technology, from that need for liquid cooling. And so given these excellent prospects, the company again raised their full year guidance, and now they expect 2024 organic growth of 12%. This was up from a previous forecast of just 10%, so an increase of 2% on the revenue growth. and operating profit margins to expand to 17.7% as the company shows good progress towards their longer-term target of 20+%. So right now they're at 17.7, but they see themselves growing to a 20+% operating profit margin. And when I see management teams give this longer term target of operating profit margin expansion, the first thing I look at is their history. Have they demonstrated growth in this operating profit margin before? Is there any justification for investors to believe that management will hit this target? Or is it just optimistic forecast with no grounds for those optimistic forecasts? So let me share with you its history in operating profit margin. All right, so if we look at Vertiv and its last decade of operating profitability, we can see growth here in this metric. I shouldn't say the last decade, I should say going back to 2021. You see growth in this metric following a volatile moment here in 2022. You see its operating profit margin expanding from under 8% all the way up to 14% in the most recent trailing 12-month period. And then in the latest quarter, you saw that operating profit margin rise even further. And so there is evidence suggesting the company is improving its operating profitability as revenue is growing. So there is justification to believe that they will have success in improving this operating profit margin going forward. Now, just to remind investors, I last updated my buy recommendation for Vertiv on May 27th, where I placed the stock as a borderline buy. There are stocks I like better than Vertiv, and there are stocks that I think are worse than Vertiv. I think Vertiv is in a good position to benefit from the rising effectiveness of artificial intelligence. I like the order growth. I like the increase in revenue expectations and profit expectations for 2024. And given the build out of data centers is likely to be a several years trend, I like its position. The borderline versus actual buy has to do with valuation. Is trading at a forward price to earnings of 29.25, and that's why the stock is placed as a borderline and not a straight out buy. Now, a couple of more quarters of accelerating revenue growth and increasing earnings per share will likely boost Vertiv into just a all-out buy instead of just a borderline buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.